Hi, this is Ian Coleman. This is this week's video analysis for the dollar index and FX majors commencing 13th of August 2018. Firstly, we're going to talk about the dollar index. We've seen some consolidation, I think for about 7 weeks, and then we've actually broken to the upside, which was something that we didn't really look at or expect in last week's report. Fundamentally, there was an FT report about Turkey and contagion into European banks, and that in turn has weakened the Turkish lira, and it's also weakened the euro and caused this dollar strength and this breakout to the upside. So what we're seeing, well, the weekly chart, we were highlighting this trendline resistance at 95.56. We've broken that. We've moved to the upside. We did mention last week, we said if we do break there, then we expect there to be limited buying. And for this Fibonacci level at 96, the figure, which is the 50% pullback level, to hold buying, but we have closed above there. We're actually closed at 96.27. We did see some stalling in price action at 96, the figure, but we have broken that to the upside. We are now looking overbought. The call for next week has really got to be to buy into dollar dips. We've got reverse trendline support now at 95.56. If we go to the daily time frame, we've actually seen a breakout of the wedge formation to the upside, and we've got reverse trendline support there at 95.78. Now we've got our bespoke support at 95.66, so that's sort of the prime area we're going to be looking at the beginning of the week to buy dollar dips. So dollar dips around about 95.76, 95.66 going into this week. And if we look actually at the weekly chart, we've got a Marabuzo level at 95.73. Marabuzo level is the midpoint from the open and the close of a strong bullish or bearish candle, and we can note that we've got previous resistance around about this level. And what basically happens in technical analysis is the resistance then becomes support. So like I say, going into next week, even though the dollar's looking overbought, the initial call has got to be buying into dollar dips around about 95.70 area. Okay, so reflecting that back onto the FX majors, and first of all euro dollar, we're going to look at the weekly chart. We broke this wedge formation to the downside. We've had a prolonged period of consolidation, and then we've broken this cloud formation to the downside. So we've broken the cloud. We've also broken that 50% pullback level. The long-term outlook for euro dollar and this wedge breakout is a move all the way down to here, which is 105.73, which is the beginning of the wedge. To the upside, we've got Ishimoku cloud resistance at 115.25. If we look to this time frame, then there's potential for a 5-wave Elliott wave to be complete to the downside, but like we said, we've got to be looking at buying into dollar dips, so really we should be looking to sell into euro dollar strength. We've got a Marabuzo level from last week at 114.85, and we've got our bespoke resistance at 115.04. Now that is also a previous swing low, or the actual swing low is at 115.10, so we're looking again at least initially to sell into euro dollar strength around about 115.10. Cable, sterling dollar, similar story. We've moved again to the downside. There's no clear indication now that this sell-off has come to an end. The 61.8% pullback level at 128.44 has been breached. We've got a Marabuzo level for last week's price action at 128.82. However, we could push through there, and if we go to the daily chart, we haven't actually got any bespoke resistance until 129.57. Now, if we look back to the 19th of July, 129.57 was the low trade. So again, it was support, it now becomes resistance. So 129.57, 129.50 area is going to be what we're going to be looking at to selling into sterling dollar strength and dollar weakness, obviously, going into next week. Dollar Swiss, we've seen a prolonged period of consolidation. There's a potential for a head and shoulders formation. There's a potential for a wedge formation. It's really looking pretty unclear in this major currency pair. If we go to the monthly chart, then we can see that over numerous times from 2008, 2009, 2010, etc., this area has been pivotal, and that's basically because it's the big figure. So we've got that psychological 1000 big figure, and it attracts price action. Now we can see that for the last 3 months we've had spikes in both directions and limited price action. We do look to be in a large bullish channel formation that probably has an eventual bias to break to the upside. However, the weekly chart, and again we can see this period of consolidation. We've got trendline resistance around about 100.70, and then we've got trendline support around about 94.62. Here we're getting no clear indication of the next move as we continue to consolidate. However, if we go to this view on the daily chart, this has the potential to be an ending wedge pattern. So 98.86 really needs to be breached next week for a bit more of a sustained move to the downside. If we go to this outlook, and this was basically what we were looking at, we had a 9 count, which was a correction count around about 99.82, and we believed that there was potential for a bearish head and shoulders formation. Again, dips have been bought into. There's quite solid resistance again to the upside around about this big figure level, and we really need to see a break of the neckline, which is around about 98.72, for some further dollar Swiss selling next week. But like I said, at the moment there's a prolonged period of consolidation. The RSI is flat. That also has a tendency to make our bespoke indicators move together, and also make our intraday analysis quite hard to decipher. But at the moment, mild bearish bias, but there is potential for a move to the upside before we move lower again in dollar Swiss. And to be honest, it's a similar story for dollar yen. If we go to the weekly time frame, we can see again that we've had sort of 3-4 weeks of little net movement. We did break this channel formation to the upside, but we've come back inside, so it's looking like a false breakout. The eventual bias is still to the upside, but the daily chart, basically to explain this a bit in more detail, what it's looking like with our bespoke indicators is that we're going to be looking at selling into dollar yen strength next week, and we're also going to be looking at buying into dollar yen weakness. So to the upside, we've got bespoke resistance at 11140, so 11140, and then we've got reverse trendline resistance at 11150. So we're always looking for these areas of confluence to initiate the trade. So selling into rallies around that zone is looking quite good next week. But then if we go to a shorter time frame, and this is the 2-hour chart, we've got bespoke support at 110.40. We've also got trendline support at 110.37. So basically selling into strength around about 111.40 and buying into weakness around about 110.40. And that's going to be our sort of call or our range at the beginning of next week. Dollar CAD, the monthly chart, we had a wedge breakout. We've now retested that wedge breakout at 129.47. But the weekly chart, here we can see that we've actually got a bearish wedge formation. And like I said, that trendline support from the larger wedge has actually held off selling last week. If we go to the daily chart, we can see that we're in a bearish channel formation. Quite important to the upside, we've got trendline resistance of these lower lows at 3201, and then to the downside we've got bespoke support at 129.38 and we've got trendline support just below there at 129.28. So again, selling into dollar strength, buying into dollar weakness for dollar CAD. If we go to the intraday chart, and I think this is probably the most interesting chart, looks like we're going to form a bearish Gartley pattern. So we've got a Fibonacci confluence area here, which is around about 132.20. That is a 78.6% pullback of this sell-off, and it's also a 161.8% extension of this rally. So really next week, 132 the figure, 132.20 is what we're going to be looking at selling into dollar CAD strength. Aussie dollar, monthly chart, we've got some trend line support at 71.98. If we go to the weekly chart, this is actually highlighting a resistance level, not a support level. 73.48 is the Marubozu, again the midpoint from the open and the close from last week, and we've got 73.55 as our bespoke resistance. So that's potentially what's going to cap buying next week. And if we go to the daily chart, then here we look to be forming a very large bullish ending wedge formation. DMARC highlights a 13 count on the daily chart. That normally means that the sell-off is close to coming to an end. The calculated stop for that DMARC count is at 71.80. We've got trendline support at 72.28. So really opposite to dollar CAD, where we're selling into dollar strength, or we're selling higher levels in dollar CAD, we're going to be looking at buying lower levels in Aussie dollar. 72.50 is looking pretty prime with a stop below this DMARC or recommended DMARC stop at 71.80. Trendline resistance 74.87. If we broke there, then sort of 76.50 is going to be an upside target next week. Euro sterling, and I think this is probably my favoured pair for next week. Monthly chart, prolonged period of consolidation, but again it looks like a wedge formation that has an eventual bias to break to the downside. If we go to the weekly chart, here we can see that we rejected this channel top around about 90 the figure. That's in between the 50 and 61.8% pullback levels. The daily chart looks to be pretty disjointed Elliott wave formation to the upside. Most important aspect on this chart is this trend of higher lows, and that comes in at 88.10. Now we've got bespoke support at 88.09. If we go to this chart, 88.09 being here, there's a potential for the start of this reverse count. So basically 1, 2, 3, 4, and then going down to 88.09 before we get a corrective move to the downside. So the medium-term bias, I believe, for euro sterling has flipped lower. Like to be able to get in short early next week. 89.50 is bespoke resistance, so we'll have to watch price action at the beginning of next week. But obviously prolonged turmoil in Turkey, or with regards to Turkey and the Turkish lira and the contagion effects, could send euro lower against sterling going into next week. Euro yen, where should we start? The monthly chart highlighted a bearish outside month. Rallies have then been sold into. The actual Marubozu level attracted selling, and we can see sort of inside soldiers are highlighting continued bearish momentum, if you like, in euro yen. However, the weekly chart, again we can see rallies being sold into. We've got some trend line support at 123.95. Now to the upside, and of course we are bearish still in this cross currency, and to the upside 127.54 is last week's Marubozu. We've got bespoke resistance at 127.56. So that's our prime area to get short on bounces this week. If we go to this time frame, which is the daily chart, here we could see the potential 5 waves. We haven't really stopped at the 161.8% extension at 127.36, and we've got that trend line support, remember, at 123.85. We've got a 261.8% extension level at 124.50, and like I said, to the upside, 127.50, 55 is prime resistance for any upside bounces going into next week. Okay, I hope you find that beneficial. Good luck for this week, and I'll speak to you again next week. Thanks very much.